Um, and so we're not hard money, we're soft money, man. This is easy stuff. Like, yeah, we're out there competing with banks, and I think oftentimes when I have that initial conversation with an investor who has not been exposed to hard money, private institutional lenders, whatever you want to call it, they're shocked.
Life and starlight, count my lucky stars, I'm all right. Things are looking up, my desires are on sight. Gotta keep grinding, make sure that it lasts forever, not only one night.
Hey everyone, what's up? It's Noah from Cola REI, famously hot real estate group, home of the re-up. Man, I'm excited. I'm interviewing someone really special, someone who has helped the growth of my business and my real estate endeavors. And I'm going to introduce you to him here in a minute. You know, this group, we're all about three things, right? Learning, networking, and growing. And we're going to check all three of those boxes during this interview. You know, we've learned a lot of great stuff so far through these videos, through our re-up meeting. We've talked about Airbnbs, we've talked about flipping, rental properties, all that. And some of you are like, oh my gosh, I'm so excited. But you want help finding the money. You're like, hey, Noah, this is great. These are all great exit strategies, right? But show me the money. I got to figure out how to buy these assets, how to buy these houses, right? So I'm going to introduce you to someone who's helped me along the way when it comes to funding, right? So without further ado, let's get him on the stream. Let's give a huge welcome to my good friend, Joey Zaniboni. Joey, are you there?
Noah, my man, I'm here.
Thanks for joining us.
Yes, man, it's good to be on. I'm excited. This is cool.
Yeah, so everybody keeps asking me, you know, money questions, right? And we did a session on private money lending. We're doing a creative financing session upcoming at the next re-up meeting. But a big piece of the puzzle that I keep telling people, especially when you're getting started or especially when you're trying to figure out how to fund a flip, is the hard money lending piece to that puzzle. Can you help us out with that here tonight?
Absolutely, man. Happy to share whatever wisdom I can that I've accumulated over the 7 years or so that I've been in the business. So fire
Awesome.
away, and I'll do what I can.
All right, cool. So you work with a hard money lending fund, is that right?
Yeah, so I work with Civic Financial. We call ourselves, we're institutional private monies, right? So that can be used interchangeably with hard money, but at the end of the day, we are an asset-based lender. That's what hard money means. In a lot of situations, that's what institutional private money means. It just means that we are securing our loan through real property. In this case, real estate, single-family homes, or 1 to 4 unit residential. So that's what I do over at Civic Financial. We focus a lot on non-owner occupied investment loans for investors who are doing fix and flips, buying rentals, all kinds of stuff.
Dude, okay, so all right. I love that you explained it that way, because I've actually never had someone say, hey, we're institutional private lending. What were the words that you used?
Institutional private lender, yeah, or institutional private capital.
Institutional private lender. You know, because if we Google hard money lending, lots of times what comes up are institutional private lenders, where people have put money into a fund, and then that fund figures out where all the money's going. Am I right?
Yes, and you got to differentiate, because that term hard money, and I'm sure we'll get into this, but it's got such a stigma to it, right? And I think that people, first of all, the lending game has changed so much, even in the years that I've been in the industry, from when I came in 2014 to now. The picture and what a hard money lender actually is has changed so significantly. There's so much capital flooding into this space, both from institutions, both on the investment side and on the debt side, on the lending side. So you're seeing lenders in this space become more, I guess you could call it professional, more systematized. We've got more resources. We've got more institutional capital to work with. And so it's allowed us to become much more competitive in this space than what you'll probably think of or expect to see when you think about hard money and what that actually entails. So
because sometimes, I think sometimes, when I'm talking to students and people in our group, it's like, I say, hey, have you worked with hard money lending before? And you can tell they're kind of like, oh, no, hard money. Like, gosh, like, was that like 17, 18%? Like, is this like,
exactly.
somebody that is going to cut off my arm if I don't, forget to make a
sign over your firstborn, on the note, and we're good to go, right?
But it's nothing like that at all.
No, not at all. I mean, maybe it was like that at the beginning. I mean, when I first came into the space, we were definitely seeing double-digit interest rates. It wouldn't be a surprise for you to see, 12, 13, 14% on a loan. But that has been essentially cut in half over the last, 10 years or so. I mean, like I said, the more capital that floods into this space, the more competitive lenders have to become. And so we're not hard money. We're soft money, man. This is easy stuff. Like, we're out there competing with banks, and I think oftentimes when I have that initial conversation with an investor who has not been exposed to hard money, private institutional lenders, whatever you want to call it, they're shocked at the types of terms that I actually relate to them that we can offer them.
Awesome. And what like right now, as we're doing this recording, like what do those types of terms look like? I'm sure it varies client to client, but ballpark figure, if I'm working with a private money lender, I was shocked to hear recently that the rates are less than what I'm paying my private money lenders with you guys. Yeah, I mean, and that's true. Like right now, just kind of baseline structure, how we would structure a loan. I know you work with a lot of fix and flip investors and people who are doing those purchase and rehab type deals, whether they end up selling it for profit or whether they end up refinancing and keeping it as a rental. We have options for all of that. But, if we start with that initial kind of fix and flip bridge loan, generally we're financing up to 80% of the purchase price of a single family or any 1 to 4 unit residential investment property, up to 80% of purchase. And then we'll do 100% of the rehab costs as well. So about 20% down. And some of this, can vary depending on borrower experience or FICO score or the location where the property's at. But in most cases, that's what we're doing. 80% of purchase, 100% of rehab. And then our interest rates are insane. I mean, right now it's 6.99% interest only is the starting baseline rate. And so, typically we're seeing rates range between that 6.99 and about 8.99 for somebody who might be brand new, just coming in to do their first deal, maybe not the best credit, but even so, that's still very competitive for, I think, what people would expect to see based on the preconceived notions they have about, what hard money lending is. And that's fantastic because, what's crazy is I think lots of times if you're working with like a private money lender, sometimes the private money lender, if you don't have experience, they're going to be hesitant to work with you, but you're lending to people who are also new to. Yeah,
we lend to folks of all levels of experience. Doesn't matter if you're on deal number 1 or deal 100. Of course, like I said, I mean, if you are bringing that experience to the table, obviously that, from a lending standpoint, that lowers the risk profile of any deal. And so as a result, we're able to, give our investors, our borrowers more favorable interest rates. So they'd probably be at the low end of that range. Max proceeds, we'd be a lot more comfortable doing that. But we'll work with folks of all levels of experience, including people that are doing their very first deals. Yeah.
Awesome. And from like a learning, like a teaching standpoint, like if you could share some tips or some insight on how someone can really put themselves in a good position to be able to close quickly, because with institutional private lending, right? Did I get it right?
I like it. You got it, man.
I'm learning.
That's the terminology I want you using from now on. Joey's not a hard money lender. He's an institutional private lender.
You can teach an old dog new tricks. An institutional private lender.
Yes, sir.
Well, hell, now I forgot my question. Oh, how can we set ourselves up to be like, to close quickly, because in our marketing, it's always like, hey, we can close quickly. We can do how can we put ourselves in a position where once we got a deal, we call you, boom, streamline.
Yep. I've worked with, and this is the biggest piece of advice I can give. I've worked with, and I love this question because I think it reassures a lot of people, especially people that either are brand new to the industry in general or that are working with a hard money or institutional private lender for the first time. It is so easy to differentiate yourself from 95% of the loan applications that we look at just by doing things that require no experience or talent or industry specific knowledge whatsoever, right? And by that I mean being responsive to the lender when I reach out. I provide you with an application and a needs list, right? So generally any type of financing, when somebody applies, they talk to the lender. The lender says, okay, great. I think we can help you. Here's what your terms would look like. Does that sound good? Okay, good. I'm going to send you the application. Along with that application is what's called a needs list, right? And that's going to outline the other ancillary documents that we would need to collect in order to underwrite and approve that loan. So you'd be amazed at how many people just simply fail to fill out a complete application or provide, the 4 or 5 items that I need just to get the process started. So, when I see, there is nothing sweeter in my job than seeing a nice, clean, complete application with all the documents that I need. I mean, I love that. When I see that, like, I want to help you make this app fly through the process, because I'm motivated, because clearly you're motivated to be diligent in your efforts to get this loan approved. And when you do that, it increases the odds that we're not only going to get it approved, but that we're going to get it approved in a timely fashion exponentially. And those little touch points happen throughout the loan process, right? So, the loan will be in underwriting and something pops up and I need another document, right? So every time I reach out to a borrower and it takes, 2-3 days for them to respond, which you'd be amazed. I mean, it often takes that long. I mean, that just further delays the process. So the more responsive and diligent and complete in your application you can be up front, I mean, that goes a long way. And even as a brand new investor, you can separate yourself and make yourself look better than somebody who's done 100 deals and can't fill out a complete application.
Got it.
So got number one piece of it. Yeah.
Just get your ducks in a row, and anybody can do that.
Anybody can do that. Like I said, it requires no specific knowledge, and I can help you. I think people also, one of the main things people should understand is that as a loan originator or account executive, whatever you want to call me, I'm on your team, right? My job is to help you get that application together and get through all of the little checkpoints that we hit throughout this loan underwriting and approval process. So take advantage of that. I'm on your side. You don't need to be nervous about calling me, asking me questions, whether you think it's a stupid question or not. I get paid when your loan closes and not before then, right? So my job is to get that loan closed.
Do you think it'd be smart for people to kind of like reverse engineer the deal, in the sense where it was like, hey, Joey, I'm looking at buying this property. Like, can you give them any insight on what financing options they might have if they called you and said, hey, look, this is something I'm thinking about pulling the trigger on, or I'm still in my due diligence period?
And that's what I'm here to do. Like, I'm an advisor. I'm a financial advisor in this space, right? So I have borrowers calling me all the time before they even go under contract, before they even maybe submit an offer on a deal, and say exactly what you just said. Hey, I'm looking at this deal. I'm thinking about putting in an offer in. First of all, I could use a proof of funds, which, by the way, is something that I can help you with. And here are the initial numbers that I'm thinking, right? I'm thinking I put an offer in at $500,000, super rough rehab estimate, just looking at pictures. I'm thinking maybe $50,000 in repairs, and we're going to sell it for $650,000, whatever it is. And I can look at that with you. We have access to software that gives us basically access to MLS data all across the country. I can pull comps. I can review your comps and give you my feedback. So, especially for new investors, but really for any investors, we're kind of I like to think of us as kind of a second set of eyes and almost a safety net to make sure before you even put that offer in, that you have that kind of peace of mind, knowing that the lender had eyes on it before you even put the offer in, and they're giving you the thumbs up to move forward, and I think that can give people a big boost, especially people that are just getting into the game.
Got it. And now you mentioned, you just threw out a number, $500,000. So like in our marketplace, here's what I love about institutional private lending is the deep pockets. Like for you, for your company, I'm sure it makes much more sense to go lend $1 million than it does $100,000 loans. The same amount of paperwork, I imagine, right? Same process. But in our marketplace, medium home price might be $225, $250 price range. Is that a good number for what you guys do?
Totally.
Is there a minimum?
There is a minimum, but the numbers you just mentioned would be well above the minimum. I think what you'll find, and I don't think this is specific to Civic or the company that I work with, because I've worked for a few national lenders in the past, and generally you want to be purchasing properties at about 125,000 and above, right?
Okay.
If you want to really assure that at least for fix and flip, that a national lender is going to be able to work with you. And the reason I say 125 and above is because a lot of lenders, including Civic, have a minimum day one loan amount, meaning our acquisition or purchase proceeds, not including any rehab funds, we want that to be 100,000 or greater generally, right? So if we're funding 80% of the purchase, we want 80% of the purchase to equal or exceed $100,000.
Great. So that makes things easier when we're doing our numbers.
Yeah, so the kind of magic number, if you say, hey, can Joe help me with this? You know, you should be shooting for around 120. There are exceptions. If our base loan's going to look like it's, 92, 93 and above, I could probably get that done. But that's just kind of a target to shoot for. So to answer your question, yeah, I mean, I'm happy to work on any loans that I can get through. I mean, we're not just about loan size. Of course, it's nice when you get a nice big one every once in a while, but those are typically a little more complex and might have a lot more blocking and tackling involved. Okay. Yeah. Our bread and butter, are nice. We love nice base hits. I'll take as many base hits all day long as I can, and those deals are usually a little bit quicker to go through the underwriting and approval process. They're typically not as complex. Yeah.
Okay, good to know. And I know some people might have questions too, and this would be a great teaching point for the group as far as like how the rehab funding works, right? Yeah. So you get to do 80% as an example, purchase price, 100% of the renovation costs. Is that given out in draws? Is there like inspections? Like just to give people an idea of how that works, if you could.
Totally. Yeah. And this is pretty consistent across industry wide. So generally you're going to get your acquisition or purchase proceeds day one at closing. And then the rehab funds will be set aside and held by the lender. And they will be dispersed in arrears. Arrears just means you complete the work, we reimburse you, right? So it's called draws or arrears, right? So we submit draws. You submit a draw request saying, hey, I just completed, let's say $10,000 worth of work. Here's the invoices and receipts showing that the work's been completed. We will then review that. We'll send an inspector. We work with, we have property inspectors all over the country. We can quickly get a property inspector out to the property just to do a quick visual inspection, make sure that kind of lines up with what you've provided in the draw request report, and then we wire you the funds. So start to finish from my initial draw request to the time I'm receiving that reimbursement, it's usually about 4 or 5 days. So definitely something to keep in mind and plan for, a little bit of a gap there. And a couple tips on that, and we kind of help you with this because it's part of our underwriting process. You want to make sure you have enough funds to get the project started, right? Because these rehab draws are coming as reimbursement, you're going to have to either float some of that cash yourself or be working or have a really strong relationship with a contractor who trusts you and is willing to complete some of that work before that reimbursement comes. So that's definitely something.
Yeah, and I've always liked these checkpoints too, especially if for newer investors. You're not getting ahead of yourself. It's having accountability as well. Yeah. It might be a pain in the butt to have inspection every 4 or 5 times or whatever. But you're staying on track. You're holding yourself accountable. The funds are, you just care more about your project. I've found. Anyways, when I'm working with institutional private lenders.
Yeah, I agree. And it's also something that, depending on your relationship with your contractor or what their disposition is, I mean, you could say, hey, I can't pay you until this is completed, right? So it's also kind of another component to keep your contractor honest and keep them, on track and on schedule to complete the work that they say they're going to complete.
We pay them work then pay anyways. Work
this
pay.
Partnership.
So if someone came to you and wanted funding for a rental property, you could do that too, right?
Yeah, totally. And like I said before, we work with a lot of investors who are doing both, right? They're doing the BRRRR strategy. I'm sure a lot of your investors in your group have heard of or utilized this strategy, right? So
Yeah.
we have a rental loan program where either we can put you right into that if you're buying a rental property that's basically rent ready or already rented that has a lease in place, and you're just looking for that long-term financing, or we often refinance folks into that same program who have just gone in, done the renovation, stabilized the property with a tenant in there with a lease in place, and now they're looking to refinance and hold for the long term. So yes,
Cool.
we have a rental program that allows them to do that. And the cool thing about that is we don't have, I mean, we're very different from traditional or conventional financing in that we're not looking at your personal debt to income, right? We're not pulling your tax returns. This is all stated income. And we're qualifying the income at the property level, right? At the asset level. So basically, we just want to make sure that the income generated at the property level, meaning your gross monthly rents, are exceeding or at least matching your gross monthly expenses. So your gross rent should be equal to or above your principal, interest, taxes, insurance, HOA, whatever it is. And as long as you're golden there, then we're good to go.
So no tax returns.
No tax returns. Nope.
Income. Don't care about you.
Nope.
Personally.
Stated income doesn't matter.
You just want to know cash flow, baby.
Cash flow is king.
Okay.
And of course we'll do a credit pull, make sure there's nothing crazy going on there, make sure you're not defaulting on all your other mortgages or anything like that. And we do, obviously we want to make sure if this is a purchase that you've got the cash to cover your down payment and your closing costs and your interest reserves. If it's a refinance, we want to make sure you've got some interest reserves available just in case.
Sure.
But other than that, assuming you've got that, no major red flags on the credit report, and the appraisal comes in where you're hoping it's going to come in, or at least at a level that makes the deal feasible for you, then we're good to go.
Cool. Well, hey,
Yeah.
I could go on and on. I got, we could talk funding all day because there's no piece of real estate that's the same. But thank you for answering those questions. If someone has a question, can they email you or reach out to you?
Man. You can give them my email. My email is just joe.zaniboni. That's ZANI. Oh, look at that. It's on the screen.
Boom.
I like it.
Boom.
Tech. All right. Yeah. So there's my email. You can email me anytime. You can also call me on my cell. It's 760-994-6693. And I'm happy to talk to you personally. Like I said, go through any deal scenarios, get you a proof of funds letter, whatever you need. I'm here to help.
You can get proof of funds letters to our group as well.
Yeah, totally. They are deal specific, so I can't,
Okay.
we don't issue like blanket proof of funds letters, but call me. We can talk about the deal, and if it sounds like something that's in our wheelhouse, then I can get you a proof of funds letter for that deal. Yeah.
Man, thank you so much. So thank you for your time. If anyone has any questions, reach out to Joe. He's helped me out a bunch. Joe, stay on the line because I'm going to ask you some questions specifically about some deals that I'm doing. So don't go anywhere. But
All right,
we appreciate you. You've been investing. You've been a big part of our portfolio, but also other people in this group. Like you may or may not realize that, but I shared a video that you did on YouTube not too long ago. And
Nice.
a couple of people were like, "Oh, he funded my first flip," or "I love that guy," So
All right. Tell him to call me. I miss him.
I will. But you're making Columbia, South Carolina famously hot. You don't even know it. So great job, man.
I love
Keep
it,
it up.
man. Thank you so much. Thank you for having me. This was fun.
Rings on the front grill, raised a couple mil so I can make a deal. Now I'm feeling too trill, like it isn't real. Whether you in it for the love or the thrill, live life.